One idea that's emerged from the conference is the potential for big tech companies to enter the investment management ring. This is a great subject, whether it be Apple, Amazon, Alphabet, even Alibaba, who, by the way, launched the world's largest market fund, money market fund. The chatter here is that as investing becomes increasingly automated, distribution will be the biggest challenge for the industry. That's where these tech players come in. They have the distribution. Our friend Dave Noddick of ETF.com says this could happen in a number of ways, from acquisitions, for example, to robo-advisors or a subscription-based service. The sky is the limit for these companies. Rick, how could this disrupt the industry? Could Apple become an ETF provider, an investment provider? Could Google launch its own ETFs?
With the amount of money they have sitting in cash, they could do anything they want. They could buy whoever they want. They could invent whoever they want to compete against. And this is true of Alphabet, it's true of Microsoft, it's true of so many of these big companies. Jeff Bezos could wake up one day and decide, hey, I want to go do whatever I feel like going to do.
But Tom, this is not easy. There is fiduciary obligations. Sure. There's legal issues. You're dealing with the SEC. This is one of the reasons they didn't set up banks, for example. You have to deal with the Office of the Comptroller of the Currency. You say that's not a big issue.
Well, they'll realize look, if B of A could handle the regulatory issues, so can Alphabet. Yeah. So they'll get over it.
It'll probably be the form of an acquisition. We interview and survey advisors all the time. The #1 tool they use for research is Google, right? So there's a big trust there. However, I'm not sure if I would put money in a Google bank right now or a Google investment company.
Yeah, but your kids might.
Kids might, sure. Well, I'd look at SoftBank. SoftBank's got all the data in the world. They know if I go to the gym. They know my prescriptions. They know I like red wine. They know I like 80s music, because they're aggregating all the data out there. They've got a $100 billion venture fund. I'd bet on a company like that.
And so here's another element to this, and it's brand and reputation. Everybody knows that everybody hates the financial services industry. We hate insurance companies, credit card companies, banks, brokerage firms. So if one of the tech companies...
Increasingly we hate Google.
I think we're increasingly hating Facebook,
we hate Facebook
more, right? So I think there might be a reputational challenge there if Zuckerberg decided to buy a bank, but I don't know that Google would have that challenge. And so I think that there is a huge opportunity, especially with the younger generation. Yeah. So I wouldn't at all be surprised to see them one day enter the space.
Do they really want to do everything, though? I mean, this is this debate about, I call it the app that ate all the apps. So in the messenger apps now, we're getting, in China, you can order food through the messenger apps. You can send money through the messenger apps. You can have items sent to you through the messenger apps. What happened to the individual ones that did this? They were all rolled up. The app ate all the other apps. Or is Google really, is Amazon really going to want to become the thing that is everything to everybody?
It's not going to be. It's not going to be Google. It'll be a Fidelity. They're privately held, something like that. Google will come in and buy them up, but use all their data and their technology to really plug in and do the best job possible.
The only thing we know is that they're not talking, and it's keeping the financial service executives awake at night worrying about it.
They should. I mean, let's give an odds on this. In the next 5 years, what percentage odds would you give one of the big companies we're talking about, Google and Amazon and Apple?
Inevitable.
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 Yeah. Inevitable.
I'm with Rick.
There's too much money there.
In the next 5 years, you think the chance of one of these companies coming in is virtually 100%.
And as soon as one of them does, they all do.
All right. That is a major statement. We'll keep an eye on that one.